In today's video, we are going to look at the stock market. So it's a Sunday, the markets are closed, which is the perfect time to just look at the charts without any pressure because the market is closed, they're not moving. So let's see what is going on in the stock markets and if that can give us any sort of indication of what we could potentially expect for the next months ahead, which means also an effect on crypto because even though there isn't much of a direct correlation lately, in general, if the market is bullish, if the stock market is bullish and money is flowing in, it is generally good for other risk assets too. Now before we start, let me start out by saying here, let's look at the fear and greed, and this is for the stock market only. So as you can see, we are in extreme fear for the stock market. As you know, there is a lot of global conflict going on. There's a lot of fear about that potentially escalating into something bigger, maybe a larger war, maybe a multi-country war, maybe a world war. And of course that leads around a lot of fear around the markets. What we've also been seeing is a sell-off, generally speaking, in US markets over the past several weeks. So that's why I also want to bring to your attention this chart. It's the seasonality, the average trading direction. All right, it's based on the average over many years. You can see what happens over here. So from about July till October, there tends to be a dip in the markets. This is just seasonality based on many years, what the price action tends to do. And this drops right into right about where we are now, the middle or the end of October. That is a decline. And then towards the last weeks of the year, we tend to see upwards price action. So keeping that in mind, we are in extreme fear, sentiment-wise, for the stock markets, and seasonality-wise, we are perfectly on track for this dip that we've seen the last several weeks. So let's start by looking at the weekly chart of the S&P 500 because it's arguably the most watched average index of US stock markets. So what we have here, very simple, it's the weekly chart. The 50 moving average is in blue and the 200 in red. And you can see here, basically from March 2011, so the past 12 years, more than 12 years, the trend has been bullish, as you can clearly see. We have stayed above this 200-week moving average, above the red, and for most part also above the 50. So my theory here simply, or my rule, is basically when we're above the 200, the high time frame is bullish. When we're above the 50, it is super bullish. We're just in full-blown bull territory. Okay? And what tends to happen is when you drop below the 50, the price tends to revisit the 200. So that's a very clear set of rules that it does tend to follow. Also on lower time frames, not just on the weekly, but on the weekly, obviously, we are looking here at the higher time frame. So very simply put, looking at this over the last 12 years, the trend is bullish. And so far, that is still the case, as long as we are above the 200-week moving average. And you can see how many times it's acted as support here. Support here in 2016, support here. In March 2020 here was the big kind of exception here because the markets, there was so much fear and it just sold off. It was a black swan event. Nobody knew what was going to happen. The world was being locked down. There was, global stuff going on. But that quickly rebounded as soon as we got back above there. Look what happened. And recently also in 2022, we got to it. We did wick below it a little bit, but as you can see, there was actually no close below it. So a wick below intra-week is fine. If it holds for the close, it's perfectly okay. So very simply, my rule here is as long as we're above this 200, we are not in a bear market. There is no crash. There is no major reason to panic at all because the trend for the last 12 years has been that is holding as support. And if it gets there or slightly below, it is an ultimate buying opportunity with a clear-cut invalidation. If it continues much lower, cut it. And the upside is basically new all-time highs every time, right? Look what happens every time. So as you can see, where are we right now? We are currently below the 50-week moving average. So we did get a weekly close below that, but the 200 is basically the line in the sand. So now that we've broken the 50, the likely stop is going to be the 200, as you've seen here, in the past, okay? So that target for the S&P 500 is about 39.50. Now, it can wick below there intra-week, and for that, I want to bring these annotations forward because this is another very common pattern that happens over and over again in markets, not just on higher time frames. It happens on all charts. It happens in Forex. It happens in crypto. It happens on weekly charts, daily, hourly, all the way down. And what this pattern is what we have here. Okay, 2022, Let me get rid of those moving averages real quick. So you can see in 2022, we clearly had a bearish trend. Okay, we were making lower lows, lower highs, lower lows, lower highs, lower lows. Okay, then what we got is we got a break in market structure. So what I just described was market structure. A bearish trend does exactly that, lower lows and lower highs. But when we make a higher high, so you can see over here, this got back above this high, which means it broke the market structure. It is no longer a bearish trend. What tends to happen is after that initial move of market structure break, we tend to get a pullback as low as the Fibonacci golden pocket, sometimes the 0.70% retracement in Fibonacci of that move up that caused the market structure break. So as you can see here, there's also these lows over here that we circled. So there could be an attempt here to grab this liquidity to come down, as you can see, maybe even a little bit below it, take out these lows over here, and then continue upwards. Because as I've shown you on the higher time frame, the chart is bullish. Okay, the weekly chart is bullish as long as we're above the 200-week moving average, and that only changes once we really break down below here. Okay, this is a key level. So bringing back these moving averages, you can see there is confluence here of the 200-week moving average here in red, and as I've shown you, it can wick below there. So it would not be impossible for us to drop to wick below these lows, below this, come back above the 200-week moving average, and then continue higher to new all-time highs, because as I've shown you, the high time frame trend is still bullish, and that doesn't change until we get weekly closes below here, right? You can see we didn't get a weekly close below, and that is basically my theory at this point in time. Still, the fear and greed is in extreme fear at this point in time. There's a lot of fear surrounding what is happening with this global conflict. Seasonality wise, we are right in that time for the dip, as we've seen the last few weeks. So this is still my primary scenario that I'm looking for. Potentially Fibonacci golden pocket 0.70, maybe even a little bit lower intra-week, and this could happen quickly. It could happen in the next couple weeks, maybe even less than that, rebound, and then I'm still looking for potentially new all-time highs. If this holds, if this scenario plays out, new all-time highs in 2024 for the S&P 500 before a major global market crash. And that also still has the confluence of me not expecting a global financial crash like 2008 or 2001 until after we get our first rate cut, which was also the case in 2000 and 2008. We first got the first rate cut before everything collapsed. Okay, we haven't had that yet. Projections are somewhere only by June, maybe even later than that, next year in 2024 for the first rate cut. After that, the danger increases based on that previous data that we do get that global crash. So for now, I think a bit more correction. Everyone gets super bearish thinking we're about to have a major financial crash. Probably the news gets crazy, lots of fear, lots of FUD, as is usual right at the lows. Everyone gets bearish, they sell short, and then we see this massive melt-up rally for 6 or 9 months. New all-time highs, everyone gets bullish again at the highs, and then maybe that is when we get our crash, because you know, maybe that lines up somewhere here between July and October, Q3 of next year. We get our rate cut somewhere maybe over here. Take out the highs, right? This looks very familiar if you know the Bitcoin weekly chart. Same thing happened there. We made a slightly higher high. Everyone got euphoric, and then massive bear market. So this is potentially something that is playing out here in the S&P 500. However, my bullish scenario that I just explained here gets invalidated if we do close below the 200-week moving average, because you can see here what happened in 2001, right? We got below there and we had a massive bear market, and in 2008 the same thing. So as long as we're above that 200, we can wick below it intra-week. That is fine. As long as we're above it and it holds its support, I am still looking for new all-time highs in the S&P 500 in 2024. Smash the like button, subscribe, and I'll see you in the next video.